Quickly, let's talk about Ford Motor, which of course is an American company headquartered in Dearborn in Michigan in the old Rust Belt area, established by Henry Ford with a Model T back in 1903. Well done. It manufactures about 6 million or thereabouts vehicles a year, so you can see where it is on the league tables below Toyota, but still a hefty number, particularly of pickup trucks in the US. $46.1 billion worth of market cap, price earnings ratio of 12 odd, and a dividend yield highish at 5. Let's look at the chart, which looks a bit tired.
Looks very sick, actually.
So what's going on here?
Well, you know, it's a hugely mixed picture. I mean, you've got so many advocates out there saying that the stock at these levels is an absolute steal. You've got a lot of shareholders that have struggled with the stock for many years saying, my goodness gracious, what's happening here? PE of now 11, dividend yield of 5. Reason why that dividend yield has gone up so much is the stock price has gone down all the way to just above $10. I think the real issue that Ford has is, you know, a number of fold. They've lost a huge amount of market share within America, and this is getting back to the whole concept of it's easy to change brands, and there's massive amount of new entries within the American market, a lot of Asian-based, you know, competitors. So to put into perspective, their market share of the American market used to be about 26% in the early 2000s. It's more than halved. They're about 13%. For sure, they sell the vast majority of trucks, or what we like to know as buckies there.
F-150s, F-650s, very popular.
They've really lost a significant amount of market share.
In exactly that space from all of their competitors.
So where to from here for Ford? Well, Ford is having a look at the Indian market, which we're going to talk about now through Tata. I mean, there are actually quite there are only a small amount of competitors there. They've gained a lot of market share in Europe. Where Ford excels are on their new EcoBoost engines, these 3-cylinder, highly efficient, you know, small little engines that have done incredibly well in vehicles such as the Fiesta and so on. Diesel is also a big deal for them, but they haven't spent as much money as other companies on new technology with regards to alternate engines, maybe electric engines, or really, you know, processing hybrid. And I don't know if that's going to keep them a little bit behind.
So hot or not?
I wasn't too excited about the business when I was doing a little bit of depth there. So I think not hot. I still wouldn't buy at these levels. If it got to $10, I would take it. Because
normally, you know, people will say, oh, well, the market doesn't always get it right. But when a share chart looks like that, often it reflects sort of softening perceptions about the opportunities for the company going forward. So let's give it a pass for now. Not